Today we'll start with financial adjustments. That is, it is towards the end of the accounting chapter 11th. Okay, so we'll just refresh what we have learned so far. So first, when we started with accounting transactions, the first step was identification of the transactions, right? So first we identify the transactions and then we record these transactions with the help of source documents or source vouchers, invoices, cash memo. We record these transactions and then the next step is posting these transactions in the journal. So first we identify the transactions, then we post the transactions in the journal. The next step was preparation of ledger accounts. Then from ledger accounts, we have prepared trial balance. And the last step in the preparation of any accounting transaction is a preparation of financial statements. So in this chapter, we are going to study the preparation of the financial statements. So any firm prepares a financial statement to identify its profit, to identify whether the firm has earned a profit, or to compare the capitals of the organization, the liability of the organization, the amount which is owing to the owners of the organization or to the outsiders, the asset of the organization, the current assets. All these are analyzed with the preparation of financial statements. So in preparation of financial statements, there are 3 accounts to be prepared. The first step in preparing the financial statement or the first account is the trial balance. The second is the PL account and the third is the balance sheet. So in this chapter, we are going to study these 3 account preparation: trial balance, PL account and balance sheet. Okay, so first we'll start with the trial balance. So any business firm prepares a trial balance, or the first step in preparing the financial statements is a trial balance. So a trial balance is mainly prepared to find out the gross profit or gross loss of an organization. So why is it called gross profit? Because it compares the sales of an organization with the expenses incurred in producing that good or service. So the sales of an organization or the income of the organization, in normal terms, the income is compared with the expenses in producing those goods and services, and an account is prepared to identify whether the firm has earned profit or loss. So in trial balance, we identify or we ascertain the gross profit of an organization. Okay, now we'll see the format of a trial balance. So trial balance is just like a normal account, that is a ledger account, which has 2 sides, that is a debit side and the credit side. Okay, so there is particulars, amount, and on the credit side, particulars and amount. So any trial balance, this first transaction posted in the debit side is the opening stock. So opening stock it will be given in the question, the opening stock of the organization is posted on the debit side. So opening stock is the stock available with the organization at the beginning of any financial year. Okay, the next is purchases, to purchases, and purchase returns. If there is any purchase return, it is deducted and it is shown in the outer column. Now the next is the direct expenses. The direct expenses are those expenses which are incurred by the firm in manufacturing the goods and services. So those are direct expenses. For example, fuel, lighting, electricity, or any expenses which is concerned with the production, manufacturing of the goods and services are direct expenses. The wages paid to the laborers are direct expenses. There is a difference between wages and salaries. The wages are the amount which is paid daily to the laborers in producing the goods and services. So wages is a direct expense, whereas salary is an indirect expense as it is concerned with administration and manufacturing or selling and distribution. Okay, the direct expenses. And on the credit side, we'll have sales, and any sales return will be deducted. Okay, and the closing stock. Closing stock refers to the stock available with the organization at the end of the financial year. So this is how a trial balance is prepared, and we balance the trial balance on the credit and the debit side, and if the credit is more than the debit, it is means the gross profit. That is, a firm has earned a gross profit, which will be shown in the debit side of trading account as to gross profit, which will be transferred to P&L account. And similarly, if the debit is more than the credit, means there are more expenses and the sale is less or the income is less, which means there is gross loss. So gross loss will be shown in the credit side. Either one of them will be shown as gross profit on the debit side if the income is more than the expenses, and if the expenses are more than income, gross loss will be shown on the credit side. So this is how a trial balance is prepared. So the main thing which you have to remember as only the direct expenses, that is related to production, manufacturing, and any inwards, for example carriage inwards, freight inwards, those expenses will be recorded in trial balance, and all the indirect expenses related to administration, sales, distribution will be posted in the P&L account. Now we go to the questions related to trial balance.